Good morning, everyone, and welcome to NYSE TV Live. I'm Kristen Scholler here in studio at the Stock Exchange. Well, stocks are a little changed early this morning after the S&P 500 shed 1.7% on Wednesday amid concerns about the deficit. The budget bill in the House of Representatives did hit a roadblock on Tuesday when blue state Republicans indicated they wouldn't support the bill without a bigger deduction for state and local taxes. Well, earlier this morning, President Donald Trump's tax bill did in fact clear the House in a victory for the GOP, and it does now advance to the Senate. Despite yesterday's pullback, the market has gathered considerable ground of late. The S&P 500 is back near its record, and with that, companies are tapping the capital markets. In fact, two companies today are making their debut here at the Stock Exchange through IPOs. Hinge Health, a digital health platform, raised $437 million last night and will trade here on the exchange under the ticker symbol HNGE. Connected TV ad tech firm Mountain also priced its deal yesterday, raising $187 million. That will trade under the ticker MNTN. Finally, of course, this morning we're still watching shares of NYSE-listed Snowflake. That stock up double digits after the company exceeded earnings expectations yesterday and provided product revenue outlook above views. Well, we've got a lot on tap this hour, and let's take a look. As we mentioned a moment ago, a pair of IPOs are taking place here at the exchange, Hinge Health and Mountain, the latter of which employs film star Ryan Reynolds as its chief creative officer. We'll have continuous coverage of today's activity throughout the hour, including testimonials, interviews, and provide you with a front row seat to Hinge Health ringing the opening bell here at the exchange at 9:30 a.m. Eastern. Elsewhere, investors are digesting the latest quarterly results across the retail sector. Bill Mann, chief investment strategist at Motley Fool Asset Management, tells us what the numbers and the guidance mean for industry giants the rest of the year. Later, a new study by Bankrate reveals changes in consumer spending habits, especially when it comes to travel, dining out, and live entertainment. Senior industry analyst Ted Rossman will have those findings. Well, as we get ready to start the trading session on a big day here at the Stock Exchange with two companies set to debut and mark their first trades, I do want to bring in our resident expert, Jay Woods. He's a chief global strategist at Freedom Capital Markets. Jay, always good to see you, especially on a double IPO day. We see the signage behind us, and Hinge Health is going to kick things off soon. What does this mean for markets?
Well, it's exciting. As someone that used to be a market maker for most of my career, Jones going to get back down there and trade because price discovery is something we take very seriously here at the NYSE. So this process is exciting for the two companies going public today. They've reached a milestone. They're handing the baton off to their market maker, and now the public gets to invest in these companies they've heard so much about. So for me, it's exciting. There's a buzz in the building, and I wish I was part of it, but I get to talk to you, which isn't a bad
You
bad
are part of it on NYSE TV Live.
I'm bumping Ryan Reynolds, apparently. I'll leave if you want to get him in here, but it's exciting. It's an exciting day.
It definitely is indeed, and just how meteoric the rise from those lows has been really in this recovery. How much of that helps an IPO market?
Well, it definitely does. When the IPO market has been slow, no one's going to deny that. We've been waiting for quote-unquote market conditions to improve. We came into the year at all-time highs. We were hopeful that first quarter, second quarter, we'd start to see more big names go public. It's starting to happen. This is a great day. 2 in 1 day, you don't see too often. So let's hope these go well and the economy, continues to chug along slowly but surely. I think this sets us up for a great second half of the year on the IPO front and overall for this bull market to continue.
Okay, let's talk about some news this morning. The budget bill passing the House. Now it makes its way to the Senate. This does push through President Donald Trump's agenda, specifically when it comes to extending those tax cuts. How is the market receiving that?
Yeah, the market is right now. We had a couple of things. The market's looking at this. This is not going to help reduce the debt, and that's kind of what Moody's told us on Monday they were fearful of. So when we got the downgrading from 3A to AA1 to put them in line with the other two rating agencies, we kind of shrugged that off. This now passes by one vote, 215 to 214. We'll see how it goes through the Senate, what changes come to it, but right now it doesn't have investors overly excited. We're still worried about the long-term ramifications. We saw that in the 20-year auction, something we don't pay attention to down around here, my 30 years, no one's been like, why are we selling? Oh, the 20-year auction. But they had trouble finding buyers for that, which meant yields are going to rise, and it's trickling through the bond market, which then led equities to sell off. So we've had a nice relief rally. We're digesting those gains, but these little headlines get people skittish because we still remember where we were just April 7th, a month ago.
That's right. And on my way up to studio here, another trader on the floor did inform me that there is another auction this afternoon. So it's certainly something that I think investors will be watching closely. We are toward the tail end of earnings season. The end of the first half will be here before we know it. What are the fundamentals in place that could set us up for a strong second half, as you mentioned earlier?
Well, the fundamentals that are good in the sense that companies are beating the earnings. The guides have been all over the place because of that quote-unquote uncertainty in the market. None more than what we saw with the retail guides over the last week. It started with Walmart last week, where they said they may have to raise prices because of tariffs. The president fired back aggressively with a tweet over the weekend, and now TJX, Target, BJ's, they're all coming out with okay earnings, but they are very careful how they say, we're not going to raise prices, we're not going to pass it on to the consumer. Nike today is up 2%. They have a deal back with Amazon to be online, which is great, but they are also raising prices. They did not say tariffs are the reason why. So when people are passing that cost on to the consumer, they're very wary of upsetting the apple cart in Washington and saying tariffs are the reason. So it's interesting to see how we go, but then you look at a stock like Snowflake, tech is still beating and they're still having solid guidance. So all eyes are on one stock next week, and that's NVIDIA. We'll see what they do. Stocks had a tremendous rally back. Ken Jensen, give us something on a guide that makes us take a leg higher, and then we'll be talking new highs in the S&P 500. I think that's a stretch, but we are poised, if they deliver, to continue this rally a little longer. I
think just about 5% from a record high that we saw last in February, right?
Exactly. We got to 3%, and then we pulled back a little bit. But healthy, we're above the 200-day moving average. We're above 5,800, which was that gap up above the 200-day and post-election day. These are healthy signs, but for those thinking V-shaped recovery to new highs, I think that's an aggressive thought. I think we need to consolidate a little farther, maybe retest the 200 and the 50-day, going back to 57.75. That is not far from here. These are normal levels. So if we retrace back to the 50-day, which is 55.75, I'm still okay that we consolidate as long as the guides are solid, the earnings continue to beat that lower bar, and we get through the tariff negotiations, which are now extended to June, July, and we get through this tax bill. Then we get some clarity, and maybe, just maybe, we finally get that leg higher with solid earnings in the third quarter. And has any of this changed your outlook on rates, Jay? I know we spoke just a few days ago, but there really are a range of expectations as to how the Fed responds in this environment. The Fed has changed their tune. They always focus on hard data, one data point at a time, and they telegraph their moves. Now they're saying, well, the hard data is great. Inflation seems to be under control. Unemployment's still at historical lows, but they're concerned. So they're going into the sentiment camp, which is at historical lows, and they're waiting to see what happens in Washington. But if they were to look at the numbers, look at the policy, they could cut 1/4 of a point. That's kind of how they set us up in December. So we'll see what happens at that June meeting. We still have the PCE coming out and a lot of key little points before their next meeting. And of course, Fed speak all the time. So we'll see what they say. But right now, the Fed is just kind of feeling like they're at that Goldilocks moment where they don't have to do anything, and they're afraid if they cut, something can change in the data that makes them look foolish. So they wait and they wait and they see, and we'll see what they do. So I think they can cut 1/4 point. I don't think they will. All right, well, good day here at the Stock Exchange. We got a lot ahead, of course, with 2 IPOs kicking off. And Jay Woods, Chief Global Strategist at Freedom Capital Markets, starting with us here on set. Jay, thank you. Yep. All right, well, stay with us because retail was in the spotlight this week as quarterly earnings rolled in, and an industry expert up next will tell us what the takeaways are.
At ICE, we aim to solve some of the biggest problems in markets. Often these issues come down to a lack of transparency because a market doesn't have the right technology, data, or systems. We address this by digitizing analog markets. Digitizing markets brings transparency. At the heart of this is our technology. It's the same technology which underpins our trading venues, that powers the New York Stock Exchange, that drives our fixed income pricing, and our mortgage platform. Deep trust in our markets has made us the world's largest exchange for energy trading. Our exchanges price the world's most important commodities, many of which support the shift to lower carbon fuels. In mortgages, we operate across the life of a loan. Through electronification, we're making the home buying process faster and simpler. And through our data, we're bringing new transparency to mortgage securities. We're bringing you powerful, fast technology, access to a depth of market data. We're building liquid markets across asset classes and geographies. And we're listening to our customers every day about what you need.
Welcome back to NYSE TV Live. The retail sector, led by NYSE-listed companies like Home Depot and Lowe's, made headlines earlier this week when reporting their latest quarterly figures. Well, with so much to dissect, Bill Mann, he's a chief investment strategist at Motley Fool Asset Management, joins me now with more. Bill, it's great to have you on the show. It just so happens that many of these discretionary retailers are based here with their stocks listed on the stock exchange. I think of Canada Goose as one example. That stock up 20% in the wake of its results. What are your takeaways?
Some of the takeaways that we've seen are that when we're talking about the tariffs, a lot of people immediately started looking at the retailers. And what we've seen is that the extraordinary retailers, the largest of them, the Costco, the Walmarts, the Amazons, the companies that have differentiation, the ones that have been setting prices, have done very, very well, while you're seeing some real pressure with companies like Target, which are just that step below, trying to figure out where they are. And so you can see a lot more nervousness about the tariffs and the impact they will have on companies that have already been struggling coming into the current earnings season.
How are you finding, Bill, that companies are adjusting in the wake of changes to trade policy?
Most of them, it doesn't seem like they are yet. It seems like, we've seen some that have tried to go to the board, but a lot of companies in the retail space are not price takers. They are the ones who simply have to keep their pricing relative to a lot of the big guys. And I thought that the comments from Walmart this last week were really, really interesting. The way they laid out the fact that they did expect there to be an effect from tariffs, but they were waiting to see exactly how it was that they felt like they were going to be able to benefit. So they weren't really suggesting that they were going to go to price, which is interesting at a 4% gross margin for the business. They were more suggesting that they expected that there would be opportunities that would come up because other companies would either have to raise prices or would have to have their own earnings weakened as a result.
Mm-hmm. Now, how should consumers anticipate that this could impact them based on what we heard from the retailers this week?
Well, I think that we're seeing retailers be very cagey about whether they're going to raise prices or not. One thing that's really interesting that we saw over April was an immediate reduction in shipping coming into the U.S. And so there actually may be a window of time in which impact than pricing that we go back to almost where we were during the height of the pandemic, where things weren't available. And so there are some opportunistic purchases that maybe people should make, but I wouldn't really worry about that so much in terms of pricing as much as I would in terms of availability for a period of time.
Now, I'm curious here if there are specific stocks within the retail sector that you think are standouts, and what more you can tell us about those specific names.
I think some of the ones we've already talked about Walmart a little bit. Walmart, interestingly enough, trading at a higher multiple than either Amazon or Microsoft. So it is very, very highly valued for a company that has minimal growth. I do think it is still a standout. Other ones, actually, oddly enough, because you would think that the tariffs would really hit them. I think that Lowe's and Home Depot, that duopoly of home improvement, are really poised for some excellent results going forward over the next year.
Bill, I want to ask you about some timely topics, even ones that have been developing this morning. We all know trade policy, as we've been talking about, and tariffs is having an impact here. But this morning, we did see President Trump's agenda make its way through the House and now advances to the Senate, this budget bill. What is the impact there?
Well, we've seen over this last week in Japan, they had a very, very negative Japanese government bond auction. We had a negative bond auction in the 20-year here yesterday. What we are seeing, I think, is an administration that's trying to get its arms around a deficit issue that is really, really large in scope. It's a little too soon to see. Obviously it's got to get through the Senate as well, although they have a very good chance since the Republicans have a majority in the Senate. But ultimately, some of the fears that we saw going through April were a question about whether the policies of the administration would actually bring down the deficit itself and attack this $37 trillion issue that is actually biting into components of federal spending in terms of the servicing and things of that nature. Unfortunately, when you see rates, when you see bond auctions go poorly, that does push rates the direction that the administration would not want them to go.
Bill, great to get your take, talking all things markets here, including the latest earnings. That's Bill Manning, the Chief Investment Strategist at Motley Fool Asset Management.
Thank you.
All right, well, as Hinge Health prepares to ring today's opening bell, stay with us to hear about how the company helped one person complete the Boston Marathon. That inspiring story is up next.
Launch team is ready to proceed at this time.
You have permission to launch.
FPU is go. LRD is go. SRO is go. CDR is go.
Ignition sequence start. Engines on.
9, 8, 7, 6, 5, 4, 3, 2, 1.
Liftoff. We have liftoff.
Hosting this event is a tremendous honor for us at the New York Stock Exchange. We like to remind people that our nation and our markets grew up side by side.
Lynn, thanks to you and the Stock Exchange for permitting us all to gather. It's so good to be back here.
But tonight, it's not just another elegant dinner among distinguished peers. It is a turning point in the history of the Medal of Honor.
We're honored to be in the presence of nearly 20 of our nation's 61 living Medal of Honor recipients.
This evening marks a renewal, a reaffirmation of our mission, and a call to action for all of us who are entrusted with carrying this legacy forward.
Because of people like you, we are able to do what we do every day, to turn that dream into a reality.
Good morning, everyone, and welcome back to NYSE TV Live. We want to take this moment to welcome in Hinge Health employees who were just seeing their company's executive remarks take place here in the boardroom at the stock exchange. We're going to continue to cover the company's IPO throughout today's program. And Hinge Health begins trading on the stock exchange today, yet the company has already been working alongside the stock exchange's parent company, Intercontinental Exchange. Katie Vizas, ICE's Senior Director of Compensation, Benefits, and HR Operations, told me why it chose Hinge Health to provide access for ICE and NYSE workers. Let's take a listen.
We met the team at Hinge about 2023 when we were integrating one of our recent large acquisitions. We've grown significantly in our employee population the last few years. So we're constantly looking at what's really driving the medical issues our employees and their families are experiencing. How can we help? What solutions can we provide that are innovative and out of the box that can really make the broadest impacts possible? We found that musculoskeletal conditions are actually one of the biggest drivers of our health claims. And Hinge had a really unique solution. We'd never seen anything like it before. We were quite impressed with the offering, and so we decided to give it a try.
Which aspects of the platform are most exciting to you?
Hinge Health's digital platform is very comprehensive, and we've loved that for our employees. Using Hinge Health enables them to do physical therapy on their own time, in real time, rather than having to be tied to a traditional office appointment type of setting. That flexibility that Hinge Health provides is really a key driver for us of the benefit.
How has the employee response been so far, and what feedback have you heard from employees using Hinge Health?
We've heard incredibly positive feedback from employees using Hinge Health. Again, that flexibility they love. We think people with the ability to access services through Hinge Health are taking much more advantage of things like physical therapy, which in the past would be sort of easy to push off, and maybe are getting some great preventative care that they otherwise wouldn't be able to take as ready advantage of.
And thanks again to ICE's Katie Vizas, Senior Director of Compensation, Benefits, and HR Operations, for that interview. Well, the testimonials only really start with our parent company, Intercontinental Exchange, because Hinge Health is helping people achieve their lifelong dreams, and that does include, in one case, helping someone run the Boston Marathon. Let's take a listen to that story.
My name's Jeff, and I've been using Hinge Health to stay pain-free and train for the Boston Marathon. After grad school and becoming a parent, I kind of maybe slowed down a little bit in my lifestyle. I wasn't kind of exercising as much, and an old injury that I had, an MCL sprain in my knee, was still lingering. I always thought that pain kind of meant injury, and so I would try to kind of stay off that area until it was pain-free. I think as I was getting older, I realized that it was maybe something I had to address more actively. When I started Hinge Health, I was pretty skeptical that it was the right thing for me. I thought, oh, I got to be in the gym, I got to strengthen, and these stretches and this band work isn't the right thing for me. And I've been impressed by how much work can go into some of these playlists. I get almost a full kind of workout session in these kind of light doses. I think one of the great things about Hinge Health is that those exercise daily playlists are pretty short. Sometimes I include it after a run, sometimes I include it right before going to bed, or sometimes, right after a little break at work. Hinge Health has been a really critical part of my marathon training. That's in large part due to the support of my care team and my PT, Katie. She's been able to really customize all the exercise playlists to strengthen my running, and that's, I think, been critical to keeping me healthy as I pick up miles and more runs every day. I'm here, I'm excited to run my first Boston Marathon. I hope to run fast and run as well as I've been training. Hinge Health has gotten me to the starting line, and so I'm just excited to race. I've loved the lifestyle that I have now and the activity that's back in my life. I'm running more now than I ever have at any point in my life, and I credit Hinge Health and that care team for kind of keeping me on my feet, keeping me ahead of injuries and pain. I certainly plan to continue running and continue using Hinge Health to support that.
An incredibly inspiring story to hear about in that particular case, and we are just about 5 minutes away from the opening bell here at the Exchange. Hinge Health executives are making their way to that opening bell podium, and we are going to take you live to the opening bell as we celebrate Hinge Health's IPO on the other side of this break.
February 14th, I rang that bell. It was just unreal. You know, the enormity of this thing is just like hitting me. I don't know about you guys, but this is really, really exciting. Some of the best ideas when your backs are against the wall, and many in this room that have been here 15 plus years, that if you just keep your head down, whatever challenges you face in your life, it will lead to days like this. We would not be here today without every single one of you killing it every day. I can't thank you guys enough, so congratulations to all of you. I get to have all the accolades up here and I get to speak, but it's really all of you guys that have made this possible. I just happen to be the facilitator, and I'm proud to be that.
You know, a journey of 1,000 miles begins with one step. But also, it takes a lot of people that want to contribute to make that journey successful. The people on our pilgrimage believe that we have a special mission, which is to give the American people, this special country, the information they need to make great decisions that will affect the world, shape the future, and improve our freedoms. It's a momentous time for me personally, but also I think for all of you, and I hope for the country, and I want to thank you all for coming today.
Welcome back, everyone, to NYSE TV Live. In just a moment here, Hinge Health is going to ring the opening bell as we celebrate its IPO. The company says it's on a mission to make high-quality musculoskeletal, or MSK, care accessible to everyone. And in an effort to achieve this, the company offers virtual physical therapy and MSK care as we hear the celebrations getting underway behind us. And that is for conditions that affect joints, muscles, and bones, including chronic pain in the back, neck, knees, hips, and shoulders. Well, Hinge Health, like many companies in today's environment, is benefiting from the latest advancements in artificial intelligence. Hinge Health, which is available to about 18 million people, says its approach is proven to reduce pain by 68%, prevent 42% of new opioid prescriptions, and avoid more than half of joint replacement surgeries. Well, later in today's show, I'm going to head down to the trading floor and speak with the president of Hinge Health, as well as a physical therapist, about how this company is providing customers the care that they need and what is next as it is set to make its trading debut here at the New York Stock Exchange. So with that, let's take a live look at the opening bell podium as Hinge Health celebrates the open. are officially off to the races. Take a look at that opening bell podium. Hinge Health co-founders Daniel Perez and Gabriel Mecklenburg up there to celebrate the open alongside the New York Stock Exchange president as this trading session officially begins. We are awaiting the first open of Hinge Health, but we will have all the coverage throughout today's session, of course, to give our viewers what they need. Joining me now to talk more about markets at the open is another one of our NYSE community resident experts, and that's senior market strategist for the stock exchange, Michael Ranking. Michael, great to have you on the show this morning.
Hi, good morning. Thanks for having me back.
Exciting day here at the exchange.
Yes, it is.
Hinge Health, a key IPO, Mountain celebrating its IPO as well. What does this tell us about the state of the market?
Yeah, look, I mean, there was high expectations coming into this year that you would really see capital markets start to open back up. Some of the volatility that we saw in Q1 slowed some of that process, but as we're seeing today, right, those capital markets are still there. Markets are receptive, to bring new IPOs to the market. And I think the other thing to take away is that the IPOs that we have seen, during Q1 and earlier this year, they've been performing really well in the secondary market, right? So it continues to show there is this demand, kind of for new companies, new innovative, kind of ideas and companies coming to the market.
Interesting. So today we see the market little changed here at the open, at least, but the S&P 500 has had a very strong run back near to within, let's say, 5% from a record high. What is the state of play?
Yeah, so it's really interesting, right? So we had this over 20% rally off of the lows, kind of from the start of April. Last week the S&P 500 was up about 5%. Now we were also coming off of an options expiration. So Goldman Sachs had highlighted that it was one of the largest May options expiration cycles that we'd seen in history. Much of that was skewed to the call side, right? And what that did is help push markets a little bit higher, right? But it also compressed some of the volatility. So we were looking for a little bit of volatility to potentially be reintroduced this week. We've gotten that. It came from a source that we weren't necessarily expecting, really kind of that treasury market and volatility that we're seeing in sovereign debt markets.
Interesting. So tail end of earnings season. Most of these Q1 results holding up pretty well, but a bit backward looking. Any takeaways there?
Yeah, look, I mean, I think, you framed it, right, where coming into Q1, right, the environment was pretty strong. Companies have continued to, show that is the case. Right, management teams have been kind of laying out kind of their playbook in terms of how they're trying to mitigate some of the potential costs related to tariffs, but they've done a good job, and you continue to see the consumers holding up, right? The economy's holding up. We're just kind of stuck in this period. We've started to talk about it as purgatory, right? Where we're in a little bit of a time period where we need to ultimately see what policy is going to look like, and then see how that is going to kind of impact the economic backdrop going forward.
And so how should our viewers navigate and view the market in that scenario?
Yeah, so I mean, and I think we're in for a choppy time period, kind of for the next couple months, right? We did get the passing of the big beautiful bill in the House this past weekend. It still needs to move, or this morning, it still needs to move through the Senate, and then we're going to have to mark that up, kind of between kind of the House and the Senate, and figure out kind of where the end game is. You have that, you have the debt ceiling, which kind of puts a real timestamp in terms of moving forward from there, and then we have the 90-day reprieve, also kind of falls in that mid-July time period, right? So we had this very significant de-risking. You've started to re-risk. I think we're in for a little bit of a period of kind of consolidation, right, and chop until we start to get a better sense of where things are. Coming out of that, kind of purgatory time frame, we've seen management teams, do a very good job in being dynamic and being able to navigate these difficult environments over the last couple of years. That sets us up for potentially kind of a positive earnings revision cycle if kind of things kind of play out in a way where we can kind of muddle through, right, and kind of work through some of the inventory builds and things of that nature, and then kind of heading into 2026, which is almost around the corner.
I know. The first half coming to a close here in just about 5 or 6 weeks, Michael. Indeed, always good to get your take. Thank you so much.
Thanks for having me.
Michael Ranking there is a senior market strategist here at the Stock Exchange. All right, everyone, still to come as we take a live look of this trading floor with many Hinge Health fans in the audience. We're going to see that company celebrate its IPO further, and I'm going to head down to the trading floor to speak with its president and a physical therapist about how the company is helping 18 million people avoid pain. Plus, a new study from Bankrate reveals a change in spending habits from American consumers. Ted Rossman, he's a Bankrate senior industry analyst, will tell us what is behind the shift, especially when it comes to entertainment. And the New York Stock Exchange recently celebrated its 233rd birthday, 233 years young. Our curator, Anna Mello, takes us through the history of one tool that has served the exchange for the past 135 years. Stay with us.
It's not about being worthy. It's about being willing. And when I look around this room, I know every person in here is willing to execute on the plan in front of us and help us continue to deliver what we've been doing. We wouldn't be here without each and every one of you. We're about to ring a bell, and that bell is not a finishing bell, that's a starting bell. That's going to start the most exciting race that we've ever done. We've made it to the starting line, we've done the work, now it's time to get after it and see what we can do next.
This is just the beginning. And we are setting the stage for even greater things to come.
This is a historic day for Titan America.
It's both an honor and a milestone to stand here at New York Stock Exchange.
I'm very proud to be part of this winning team.
You made this happen with your passion to grow the business and your commitment to excellence in everything you do.
Looking into the future, that Titan America is on to its next chapter of success.
We are ready and we'll be seizing all opportunities. So let's ring the bell with confidence for our success.
Welcome back, everyone, to NYSE TV Live. We are awaiting Hinge Health's IPO open. We did see them on the podium earlier to celebrate their listing here at the exchange. And we're continuing our coverage, as we always do on weekday mornings, of what matters most to our viewers. Well, a new survey from Bankrate revealed that more than half of U.S. adult respondents expect to spend less on travel, dining out, and live entertainment this year compared to last year. Joining me now to dive into this study with that figure that you see on your screen is Ted Rossman. He's a senior industry analyst at Bankrate. Ted, always great to see you. Appreciate you joining us early this morning here as we are now off to the races with the market open. What does this latest data reveal?
I'm really fascinated by this disconnect between what people are saying and what they're doing. 54% told us that they're planning to cut back this year on travel, dining, and live entertainment spending. That's actually 5 percentage points more than the group that said they were cutting back last year. The disconnect is that spending has remained really strong in these categories. The Census Bureau says that bar and restaurant sales were up 8% year over year last month. We saw a similar figure back in March. Travel demand has slowed a little bit, but it's still growing. It's just not growing as fast as it was a couple of years ago. The TSA is on track to screen a record number of air travelers this year. So it's just so interesting that consumer sentiment remains depressed. Actual spending has been much stronger.
Interesting. And in terms of where we go from here, Ted, is there any sort of indication that we can glean from this survey as to what might be ahead?
One warning sign is the amount of people taking on debt. Overall, it's about 30% of U.S. adults planning to take on debt for travel, dining, and live entertainment this year. It's highest among young adults. About 40% of Gen Zers and millennials are willing to do so. Not to shame anybody or say you can't have any fun, But it is notable that the average credit card charges about 20%. So the fact that more people are financing this over time is a red flag. A lot of people in their 20s and 30s are prioritizing experiences, even as they're pessimistic about other things. Many are delaying milestones like marriage and home buying and having kids, and they're worried about their student loans. And there's a lot of things people are concerned about, but there's also this whole revenge spending thing of, at least we can go on the trip, at least we can go to the music festival. People are still having that post-pandemic sort of you only live once thing. All for people having fun. Do want to warn against the dangers of this debt. So maybe there are ways to cut back, maybe stick a little closer to home, set money aside ahead of time. You don't want to be paying for that vacation 3 years from now if you're only making minimum credit card payments.
What are some best practices, Ted, as we head into the summer months, knowing that those typically are busier months? People want to get out, enjoy the nice weather, and oftentimes spend.
Be flexible with your travel planning. If you let the deal dictate when and where you go, that's a way to save. So if you want to go to the beach, but you don't care which beach, be flexible. Cast a wide net. Maybe go somewhere in its off season or shoulder season. In the summer, places like Florida and the Caribbean might actually be on sale because us Northerners want to go there in the winter. You could fly midweek instead of on the weekend. You could drive instead of fly. You could cash in some rewards points and miles. These are all ways that people can be flexible. I also like the idea of setting money aside ahead of time. Setting that budget, maybe having money carved out of every paycheck, maybe even put it into a separate account. Studies show that people stick with a goal more when it has a name, like Perez 2026. That could be a sub bank account. You're not as likely to dip into that if you know what it's for.
Yeah, I think that's a great advice, Ted. Always good to get your take and look at the latest data. That's Ted Rossman. He's a senior industry analyst at Bankrate. All right, everyone. Well, this past week in the New York Stock Exchange officially turned 233 years young. And since taking up permanent residence on the corner of Wall and Broad Street in 1865, the exchange trading floor has seen many changes. It's evolved. A few, if any, tools have remained on the trading floor during all this time, but one object has served the exchange since 1890. Our curator, Anna Mello, has more.
A distinctive sound can elicit strong memories that last for hours or even a lifetime. Those following finance with their ear to the ground will readily recognize the sound of a tolling bell and a gavel strike as representing the close of global capital markets, a soundscape unique to the New York Stock Exchange. The New York Stock Exchange has been striking a gavel at the close of trading since 1817, first to signify the end of trading one single security, and today signifying the end of the entire trading day. Countless gavels have struck this exact same sounding block since 1890, which is before women had the vote, before the first manned flight, and even before sliced bread. This sounding block has witnessed countless stories, and here are just a few. The sounding block began its career during the Second Industrial Revolution. Steam power fueled progress. Railroads and canals connected the country, and Edison's light bulb filled America with a warm electric glow. Originally, from its perch upon the bell podium, the sounding block oversaw a seething mass of humanity in swallowtail coats and stovepipe hats, belting out the cacophonous din of open outcry trading. As the steam age raced ahead, heavy industries like railroads raced to list their securities, brokers raced to meet demand, and the New York Stock Exchange's first permanent home raced towards obsolescence. To make way for both broker and technology, the New York Stock Exchange's first permanent home was demolished in 1901 in order to make room for its current home. As brokers shed their Victorian garb in favor of double-breasted sports coats and bowler hats, the New York Stock Exchange christened its new home on April 22nd of 1903. The sounding block was placed upon the freshly hewn marble of the bell podium, where it has remained ever since. A decade later, World War I sent global financial markets spiraling into a panic. All foreign markets had closed as of July 30th of 1914, and the New York Stock Exchange quickly followed suit, closing the next day and beginning our longest ever closure. When America entered World War II 23 years later, the sounding block witnessed an even greater seismic shift. With nearly 1,000 members of the trading floor community off fighting for democracy, trading floor jobs were filled by women for the first time, starting in 1943. Those soldiers lucky enough to return came back to an America well equipped for growth, as increasing consumer demand, surging product development, and ample disposable income generated an economic boom and a bull market that lasted for 8 years. 2 decades later, the sounding block had a box seat view to the upheaval of the 1960s. As men shed their wool suits in favor of synthetic fabrics, the New York Stock Exchange shed its status as an all-boys club. Active in the securities industry since 1954, Muriel Siebert was attracted by the egalitarian nature of the trading floor, where a broker's compensation was determined by ability and not by gender. On December 28th of 1967, Siebert was admitted as the first woman to own a seat on the New York Stock Exchange. 3 years later, another barrier fell when Joseph Searles II became the exchange's first black member. Even before joining the New York Stock Exchange on February 12th of 1970, Searles had enjoyed an impressive career, playing professional football for the New York Giants, as well as acting as an aide to New York City Mayor John Lindsay. At the dawn of the information age, stock trading had remained mostly unchanged since the sounding block began its career in the 1890s. Each auction was held verbally, and to an outside observer, the floor appeared completely unaltered between 1929 and 1979. But in 1979, the view changed dramatically, with the installation of over 15,000 pounds of computer equipment, all supported by a massive superstructure at the top of the trading floor. The personnel working beneath continued to change their look with the times, swapping out their patterned polyester suits as the CRTs around them changed to flat screens. Today, the New York Stock Exchange runs the last stock trading floor, utilizing a hybrid trading model unique among its peers, utilizing electronic trading technology in tandem with the human element. And with an active trading floor, the sounding block remains in use and is struck at the end of every trading day. Without a pen, a sheet of paper would remain blank. Without nails, a house would fall to the ground. And without a sounding block, the strike of a gavel would be inaudible. This humble object has been struck at every closing ceremony for over 100 years, loyally serving one single purpose: to shepherd the global capital markets, the New York Stock Exchange.
When I step into this place, it feels like home. I've been here 38 years on the trading floor. I started downstairs in the cafeteria. I was a young girl, and I didn't know a lot. But my manager, she saw more in me than I saw in myself. And she said to me, Yvette, have you ever done anything in bookkeeping? And I was like, no. But she says, well, you know what? I'm gonna teach you. Now, I stand here 38 years later. I would never have thought in a million years that taking a job as a prep in a kitchen would actually lead to where I'm at today. I came from foster care. Not a lot of people have been through the pain and the suffering that I've been through. Even though some days may look dark, learn from me, don't take it to heart. Let it process, let it happen, and you continue to do the right thing, because that's what gets us where we need to be.
Oh, yeah. Welcome back, everyone, to NYSE TV Live. We are down here on the trading floor. This is the moment we have all been waiting for. Earlier this hour, Hinge Health rang the opening bell at 9:30 a.m. Eastern to celebrate its IPO. Its shares are going to start trading later, and joining me now with more is the president of Hinge Health, Jim Pursley. Jim, welcome and congratulations.
Thank you, Kristen. It's a pleasure to be here.
So exciting, a great crowd that you have here for the IPO, and of course your shares will start trading later today. What do our viewers need to know about Hinge Health?
Well, first of all, it's a pleasure and a privilege to be here today. This is, in many ways, the culmination of 10 years of hard work, but it's also just the beginning of the next chapter. And we have a vision to transform the way healthcare is delivered using technology to automate care and free millions of people living around the globe from pain, starting with musculoskeletal pain today. And so this is an important step, but it's just a step in something much bigger that we hope to accomplish in the years and decades ahead.
What more steps can we expect in the years and decades ahead?
Yeah, well, first and foremost, we still have a lot of work to do in the existing markets that we're in today. So we're using AI and computer vision, which is a subfield of AI, to automate physical therapy, making it more affordable, accessible, and just a better member experience to help people, again, move beyond pain. We think that if we can get that right and prove that that we can do that, we can move beyond just physical therapy and someday beyond musculoskeletal pain to automate care in ways that, again, makes all of healthcare more accessible, more affordable, and a better experience for all of us.
What does this moment, Jim, mean to you, taking the company public here at the New York Stock Exchange?
Yeah, I stand here this morning just with a profound sense of gratitude. You don't take this for granted. When you start a journey like this, there's a lot of things that can go wrong. There's a lot of things that did go wrong, and you don't take this for granted. And so this is tremendously affirming and encouraging. There's a lot of our employees here today, a lot of our customers here today, our partners, people that really are responsible for being able to stand here today and talk to you. Again, just really a sense of gratitude.
How have they been a part of the journey, the incredible crowd that we see behind us, and of course that we were showcasing during the opening bell as well?
I'd like to think that I'm objective, but we have the best and brightest and most decent people in the world working for us. And so that's one of the ingredients to our success is the people that we hire. But also today we have a lot of our customers and partners. And the way our business model works is to get access to our members. Large self-funded employers, as an example, have to give us access. And the early days of a young company, unproven, those early customers that trusted us, that gave us the privilege of serving their people, they're the reason why we're here today. And those customers today, we're over 2,300 customers, but those first couple, some of them are here today, were the ones that trusted us when, I'm not sure we were deserving of a whole lot of trust. And so we're very grateful, and they deserve a lot of the credit as well.
An incredible story, Jim. We are rooting you on. We're going to be awaiting that first trade here throughout the trading session, and congratulations again on a major milestone.
Yeah, thank you, Kristen, very much appreciated.
Again, that's Jim Pursley. He is the president of Hinge Health, that company making its debut here at the New York Stock Exchange today. Let's take a live look at the trading floor to gauge some of the action as we're just about 25 minutes into the opening bell. We are continuing our conversation with Hinge Health here at the New York Stock Exchange with an impressive crowd, and we want to hear now from the lead physical therapist at Hinge Health about the incredible work that she's doing. Joining me now with more is Claire Morrow. Claire, welcome, and congratulations to you too for all of the work that you've put in up until this point.
Oh, thank you. I'm getting a little bit emotional. This is so incredible to be here right now.
It is such a celebration that we're honored to be a part of with your company here at the New York Stock Exchange today. Tell me more about the work that you do for Hinge Health.
We really inspire our members to change their lives, to improve their health, to improve their function, their quality of life through movement. We connect them with physical therapists, with doctors, with health coaches, so that they're really able to feel empowered to help manage their pain conditions.
What does this moment mean to you?
I joined Hinge Health a little over 5 years ago, and I've watched the company grow so much. But what's so exciting is that we've stayed true to our true clinical philosophy and our value, which was to truly fundamentally change and improve how we were delivering care to people struggling with pain. And it's amazing to really see that come to fruition and really scale that. We're just helping so many more people.
And how do you think today is going to help you pursue your goals at Hinge Health?
Yeah, today is so exciting because we're going to be able to even reach more people. We'll be able to reach, think about people that have a hard time getting to physical therapy, whether it's because they live in a rural area, whether it's because they can't afford regular co-payments, or they don't have access to good physicians. We'll be able to actually meet them where they are and provide them with comprehensive care so that they can think about managing their pain better.
Any tips, quick tips, Claire, that you can give us to stay in good shape, especially at the office?
Yeah, especially at the office. We like to say everybody moving, so just keep moving. Movement is medicine. One of the most important mantras that we have at Hinge Health is to just keep moving. So don't worry about sitting in the same position for too long. It's actually more important that you get your body up and move.
Claire, incredible to speak with you. Congratulations on your journey, and thank you for all that you do.
Thank you.
That's Claire Morrow there. She's a lead physical therapist for Hinge Health, and we are down here on the floor of the New York Stock Exchange awaiting the debut of Hinge Health. That deal priced last night. Its shares will officially start trading on the exchange today, and in fact, we have a double IPO. Mountain also priced its deal last night. That company making its debut here at the Stock Exchange as well. You can track both of those shares and stocks as they open about midday in today's trading session. Well, we've seen the stock market on quite an impressive run since about mid-April. And of course, those market conditions do make it more advantageous for companies to tap the capital markets, grow their businesses by raising more money, becoming public companies. And a reminder for our viewers, even our new viewers today, take a look at your screen. These are all the streaming services that you can find our weekday program on, 9 to 10 a.m. Eastern, here at the New York Stock Exchange, covering all the market action, executive insight, IPOs, and major news. We appreciate you watching today. For all of the Hinge Health employees celebrating this major milestone, and we'll see you back here tomorrow morning at 9 a.m. Eastern. From the NYSE TV team, thanks again.
Thank you for being innovators in the market. Thank you for all you do every day to show the world what best in class truly means.
We are incredibly proud to join the ranks of other highly successful companies who partnered with this legendary institution.
What a time to be here. I am so proud of what we're doing.
This is a huge milestone for our business. There's a lot of people responsible for getting to where we are today.
We have a role to play in bridging the gaps that exist today between us.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. I'm so optimistic about what lies ahead. It has been a privilege to be with you.